The Kenyan Shilling, a symbol of national pride and a key player in the global financial arena. But in recent times, the shilling's journey has been anything but smooth. It has faced a relentless onslaught of challenges, leading to a period of marked depreciation. As of late November 2024, the KES stands at a precarious point. It recently weakened against the US dollar, trading at 150.50 to 150.70. Although it had shown signs of recovery, reaching a high of 150.30 to 150.50 earlier, the renewed pressure highlights the currency's vulnerability in the face of global economic headwinds. From its peak, the shilling has depreciated significantly. This decline has been a cause for concern for businesses and individuals alike. The reduced purchasing power of the shilling has made imported goods more expensive, fueling inflation and impacting the cost of living. The fluctuations in the shilling's value underscore the intricate dance between local economic factors and global financial forces. This essay delves into the factors behind the shilling's recent struggles, examining the measures taken to stabilize the currency, and providing a balanced outlook for its future. We'll explore the potential scenarios, optimistic, pessimistic, and the most likely that could shape the shilling's trajectory. Finally, we'll equip you with practical advice on navigating the complexities of the Forex market in these uncertain times. Whether you're a seasoned Forex trader or simply trying to understand the impact of these fluctuations on your daily life, this deep dive into the world of the Kenyan shilling will provide valuable insights and actionable takeaways. So, buckle up as we embark on this journey of exploration and analysis. To understand the shilling's recent woes, we need to dissect the key factors that have contributed to its decline. The confluence of these challenges has created a perfect storm, battering the shilling and pushing it into a state of vulnerability. Firstly, inflation has reared its ugly head, eroding the purchasing power of the shilling. As the prices of goods and services rise, the shilling buys less, weakening its value in the international market. This inflationary pressure makes imports more expensive, further straining the shilling's value. Adding fuel to the fire is Kenya's reliance on imported goods, particularly fuel and machinery. This dependence on imports creates a constant demand for foreign currency, primarily the US dollar, putting downward pressure on the shilling. When the demand for dollars outstrips the supply, the shilling naturally weakens. Another critical factor is the decline in Kenya's foreign exchange reserves. These reserves, held by the Central Bank of Kenya, act as a buffer to stabilize the shilling during periods of volatility. However, when these reserves dwindle, the central bank's ability to intervene and prop up the shilling is hampered, leaving it susceptible to further depreciation. Finally, global economic shocks have delivered body blows to the shilling. The ongoing conflict between Ukraine and Russia, coupled with the recent Israeli-Hamas tensions, have sent ripples of uncertainty through the global economy, impacting currency markets worldwide. The shilling, already grappling with domestic challenges, has been caught in this crossfire, further exacerbating its decline. Recognizing the urgency of the situation, the Kenyan government and the Central Bank of Kenya have sprung into action, deploying a series of measures to stabilize the shilling and restore confidence in the currency. These initiatives represent a multi-pronged approach designed to address both the symptoms and the root causes of the shilling's woes. One of the key strategies has been to bolster the country's foreign exchange reserves. The central bank has been actively participating in the Forex market, purchasing dollars to increase its reserves and strengthen its ability to intervene and defend the shilling when needed. This proactive approach aims to create a cushion against future shocks and reduce the shilling's vulnerability to external pressures. Furthermore, the government has been laser-focused on attracting foreign direct investment, or FDI. By creating a conducive environment for foreign businesses to invest in Kenya, the government aims to bring in a steady stream of foreign currency, bolstering the shilling's value and supporting economic growth. These investments, spanning various sectors, signal growing confidence in Kenya's economic potential. In a bid to improve the balance of trade and reduce reliance on imports, Kenya has also been actively pursuing new trade agreements. These agreements aim to open up new markets for Kenyan exports, bringing in more foreign currency and reducing the demand for dollars needed for imports. By diversifying its trading partners and boosting exports, Kenya can create a more favorable environment for the shilling. Adding to these efforts are the remittances from the Kenyan diaspora. These remittances, sent by Kenyans living and working abroad, provide a vital source of foreign currency. The government has taken steps to encourage these remittances through various initiatives, recognizing their importance in bolstering Forex reserves and supporting the shilling. Section 4. The road ahead, charting the shilling's future course. Predicting the future of any currency is a complex endeavor, fraught with uncertainties and potential pitfalls. The Kenyan shilling is no exception. However, by analyzing current economic policies, global trends, and potential risks, we can paint a picture of the possible scenarios that lie ahead for the shilling. The optimistic case hinges on the success of the government's stabilization measures. If inflation is brought under control, exports surge, and foreign investments continue to flow in, the shilling could stage a robust recovery. This scenario assumes a favorable global economic climate and continued commitment to fiscal discipline. On the flip side, the pessimistic scenario paints a more cautious picture. If the government's efforts to tame inflation falter, and global economic headwinds intensify, the shilling could face renewed pressure. A global recession, coupled with domestic challenges such as rising debt levels, could further weaken the shilling. The most likely scenario, as with most economic forecasts, lies somewhere in between these two extremes. The shilling is likely to experience a gradual, albeit potentially volatile, recovery. Its performance will hinge on a delicate balancing act between domestic economic reforms and the unpredictable nature of global economic forces. Factors such as the outcome of geopolitical tensions, oil price fluctuations, and the pace of global economic recovery will all play a role in shaping the shilling's trajectory. While the path ahead may be uncertain, Kenya's proactive approach to tackling the challenges and its commitment to creating a stable economic environment offer a glimmer of hope for the shilling's future.